Hello, my name is Jen Reuter, and I'm an associate at Spaulding Ridge. Thank you for taking a few short minutes to watch the capabilities around tax planning as a utilities company in Anaplan. Planning for taxes could be unique in the utilities industry due to the nature of a lot of utilities companies operating in a variety of states, in addition to having to plan for federal taxes as well. There's a lot of different temporary and permanent differences that need to be accounted for in this process, as well as considering any of the vintages or other rules around applying credits to get your effective tax rate. If we take a look here in Anaplan, what you're looking at is a tax planning page. And this page is shown by state. So you could see here, we could toggle between states and it will reflect the corresponding book income as well as any of the other applicable tax rates, differences, credits, etc., to get you to your effective tax rate. If we start at the top, we're looking at our book income for Maryland. This is pulling from your income statement. So there's integration happening in the background of Anaplan that's feeding this line. So as any other planning processes are going on in different areas of the model that are not on this page, this will update accordingly. Taking a look down here, we have then tax depreciation and book depreciation being applied. We also have a line here for permanent differences. While there's just one, Anaplan can handle as many as necessary. So if I were to go and plug this in, we'll see it affect the taxable income on the right. Let's make that a little bit smaller. And you could see it update accordingly. If I copy this over, we'll see it update for the following years as well here on the right for the taxable income. Taking a look, we also have any NOLs or net operating losses to be applied here, as well as a tax rate assumption. Due to the nature of utility companies operating in a variety of states, you may have different tax rate assumptions that you need to work with. As I stated earlier, right now we're looking at Maryland. If we switch, say, to Ohio and we want to have a different tax rate applied, you could see here that the tax rate assumption is 18%. This will ultimately allow you to plan with different tax rates, but give you a total company view and aggregation using the correct tax rates that need to be applied for each state. Then we work our way down, we have our credit balances. If there's any specific vintages or rules that need to be applied to how credits are ultimately applied, then that could be accounted for with logic in Anaplan. You could then apply these credits, setting any limitations or, again, any other rules that need to be taken account for, ultimately to walk you down to your effective tax rate below. As mentioned earlier, Anaplan can handle this too for any of your federal planning that needs to be done. As long as there's logic or rules and criteria, we can apply that in Anaplan to give you a much clearer and effective way of planning for taxes as a utilities company. If you have any further questions or want to follow up on this, feel free to reach out to us using the contact information on the screen here. Thank you so much for your time. Have a great day.